like to concentrate on the economic and social dimensions of this crisis, because in fact, the destabilization of national economies, the social impacts of the lockdowns are in many regards more devastating than the pandemic itself. Let me put it in perspective. The crisis started in January. The key dates are the 7th of January, when the Chinese authorities actually identified the virus and eventually declared a pandemic within China and took the various measures. And then we had another very important date, was the World Economic Forum, which met between the 21st and 24th approximately in Davos, Switzerland. And of course, the issue was discussed, but there we're dealing with major financial institutions, the major pharmaceutical industries were there, the foundations, the politicians, the World Health Organization Director General was there. One suspects that there was an important meeting on the sidelines of the World Economic Forum in Davos, which in essence set the stage. I should mention there was another important date, and that is October, in mid-October, when under the auspices of the Johns Hopkins School of Health, with the participation of the Gates Foundation, the World Economic Forum, there was actually a simulation of a coronavirus pandemic. And that, of course, was before the event, and it was an exercise into simulating what would happen, both in health terms, but also in economic terms, including the disruption of financial markets and so on. So flash forward to Davos around the 20th to 24th of January, and then on the 30th of January, a very important decision was taken. And I suspect that this decision, which was taken by the Director General of the World Health Organization, was already discussed at Davos with major financial institutions, UN institutions, the World Bank, the IMF, and of course the various foundations and the pharmaceutical companies as well. And that was to declare a global health emergency of international concern, which was launched on the 30th of January 2020. And it was launched, it was not defined as a pandemic, it was a global emergency outside China, because already within China the pandemic had been launched, and emergency procedures had taken place. But on the 30th, they launched this public health emergency at the global level at a time when there were only 150 cases worldwide outside China for a population of 6.4 billion approximately. Now, this decision unleashed subsequent developments, because on the 31st of January, the Trump administration ordered the disruption in air transit to China. In other words, there was a lockdown, so to speak, on air travel, but there was also a pervasive impact on all the channels of trade, investment, communication with the People's Republic of China. And of course, this decision to cut air travel to China was also tied into the ongoing trade war between the United States and China. Now, what was the underlying impact? The first underlying impact was on the Chinese economy. It had devastating consequences because it disrupted, first of all, it disrupted the channels of international trade and communication. And as we know, the Western economies are heavily dependent on imports from China. So that in effect, the first stage of this economic crisis was the disruption in the Chinese economy and its manufacturing base. It coincided with the Chinese New Year, but it extended beyond. And to date, I can say that trade with China has not been restored corresponding to its previous levels. There's been an absolute collapse in container trade. We must understand that Western economies, and particularly the United States, are heavily dependent on made in China. That's part of the offshoring development which has characterized the last 30 or 40 years. In other words, the delocation of manufacturing. And in fact, for households, virtually, 70% of what we consume, roughly, of course, is made in China. And there's certain sectors like pharmaceutical, health products, etc. But the whole range of commodities, cell phones and so on, are made in China, so that a disruption in trade with China is immediately going to have repercussions worldwide. And it will affect, of course, the retail end of the economies of Western countries. Now, let me move forward a little bit, because in the month of February, you start to have major disruptions in stock markets. Now, and then you also have, and that's very important, you also have a very major collapse in the price of crude oil. In fact, in early March, the oil market, well, I should say the price of oil declines to its lowest level since the early 90s. This was presented as an issue of supply by Saudi Arabia and some misunderstanding, and then Saudi Arabia started to produce to sell large quantities of crude oil, which then led to the collapse in the price of crude oil. But I think, in fact, what happened was the manipulation of the oil market. And that manipulation of the oil market also coincided with the financial crisis, where stock markets started to collide. Now, some analysts, of course, will say, well, this was spontaneous. Nothing is spontaneous in financial markets. Financial markets are manipulated, particularly by institutions which have inside information or foreknowledge. And mind you, it should be mentioned that the simulation back in October did in fact envisage the collapse of stock markets. That the fear and intimidation campaign caused by the coronavirus would trigger the collapse in stock markets. It's not to say there's a financial impetus, but there's also the fear campaign which prevailed and which ultimately led to a situation where small investors, let's say small investors in the United States, who have their household savings in stocks and various financial instruments, well, there has been a massive collapse in savings, and there's been a massive transfer in wealth. In other words, the people who lost their money there in the course of the month of February, well, this is appropriated by financial institutions. So what has happened is a massive concentration, unprecedented concentration of financial wealth, and accompanied by a collapse in stock market values. Of course, certain industries were affected, like the airline industries, almost immediately upon Trump's decision to start curtailing air transport with China. But it should be understood that the financial crisis is not something separate from the fear campaign. The fear campaign, in a sense, favored speculative transactions, particularly in certain areas, and there we saw a major rearrangement of the structures of income and wealth, particularly in the Western countries, but worldwide, where many companies are simply driven into bankruptcy. Airlines are in a free fall, and there is a concentration of wealth at the highest levels of the financial establishment. Now, I think in examining the economic impacts, we must distinguish between what we might call the financial variables within the money markets on the one hand, and the impacts that this crisis has triggered in what we might call the real economy. And then in that regard, we see the progression in the course of the month of March, where we have a lockdown. It happens in several countries, and in some countries it's devastating. In Italy, the tourist industry is virtually closed down. We can imagine the impacts that this will have on air travel, tourism, restaurants, service industry worldwide. And at the same time, we can also imagine, well, in fact, it's a reality, the impacts on small and medium-sized enterprises worldwide, not limited to one country, all over the world.
The Center for Research on Globalization depends on your support. To make a donation or purchase a book or DVD, please visit globalresearch.ca and click Donate on the menu bar.